Corelogic did it yet again. For the fifth consecutive month, Corelogic downgraded their 12-month housing market forecast. In today's video, I'll share their latest real estate market predictions, as well as the top 5 US cities in which they believe home prices will decrease the most over the next 12 months. I have a lot to share in today's video, but first, if you guys want a real estate agent referral, whether you're looking to buy or sell a house in virtually any parts of the whole United States here, check out my new website, which is realestateteamfinder.com. I'll personally call you to learn about your real estate goals so I can best match you with a great real estate agent. That's realestateteamfinder.com. With that said, let's begin today's video. In any case, before they shared their real estate market predictions, they shared how home prices have changed over the past 12 months here. So it says home prices nationwide, including distressed home sales, increased year over year by 4.5%. That's September last year through September this year. On a month-to-month basis, prices increased by 0.3%. Now, before I share their forecast here, let's talk about their previous predictions this year. So in January this year through January next year, their forecast was a gain of 3.1%. Then February through February next year, an increase of 3.7%. That marked the third consecutive upward revision in their 12-month housing market forecast. Then in March, a gain of 4.6%. April through April 2024, a gain of 4.6%. That was flat compared to the previous month. Then in May through May 2024, they forecasted for home prices to increase by 4.5%. That was a downward revision from their previous forecast. Then in June, a gain of 4.3%, a slight decrease compared to the previous month. Then in July through next July, a gain of 3.5%, the third consecutive downward revision. Then in August, an increase of 3.4%. Then enter September through September of 2024. Their housing market predictions for home prices is a gain of 2.6%. That marks the fifth consecutive month regarding a downward revision in their 12-month housing market forecast. Also, this is quite the turnaround as well, because just a few months ago, their forecast was a gain of 4.5%. Now it's only a gain of 2.6% over the next 12 months. So here's a snapshot looking at their forecast compared to what's happening right now. So again, their forecast through September of 2024 is a gain of 2.6%. They're also forecasting for prices on a national level to rise by 0.1% from September through October this year. And I'm really scratching my head regarding this. Let me know in the comments below, but it's normal for prices to decrease in October. And on top of that, we have rates over 7.5% at the time of filming this video as well. So my forecast, I would say, is a decrease in prices in October. But of course, we'll see what happens here. What I do also want to mention as well, a common question I get is, how accurate were their previous forecasts? So their previous forecast was right here, 1 year ago. This is their forecast posted on November 1st of 2022. Their forecast for home prices, the change from September 2022 through September 2023 was a gain of 3.9%. So they actually came very close, because the actual number here came in at 4.5% compared to the forecast of 3.9%. Corelogic also noted the following here. It says US single-family home prices increased by 4.5% year over year, the largest such gain since February. The Northeast continued to post the strongest rates of appreciation, with Maine seeing a 10.1% increase in prices from September last year through September this year. That was the first double-digit HPI gain recorded in any state since early 2023. HPI, by the way, stands for their home price index, which is all these figures here is based on that index here. Now, here's something I kind of want to audit myself here, because it says, despite mortgage rates approaching 8%, inventory constraints, and a healthy jobs market, this should keep price growth moderate but steady over the next year. So I want to break this down because rates right now, which again is Tuesday, November 7th, the average 30-year fix, I just refreshed this, is at 7.46%, a 2 basis point decrease compared to yesterday. FHA and VA loans is around 6.82%. 1 year ago for a 30-year fix, we were looking at 7.25%. So rates are about 0.21 percentage points higher compared to 12 months ago. Also, according to Investopedia.com, average rates are at 7.89%. The reason why Investopedia.com tends to have higher quoted rates is because they quote a wider range regarding FICO scores in the range of 700 to 760 compared to the Mortgage News Daily looks at FICO scores over 740. So going back to Corelogic report here, talking about inventory constraints, I think they mean on the resale market, which if you look at pre-pandemic levels, yes, we're still down by over 40% compared to 2019 and 2018. But here's something that I have not shared with you guys this week because inventory is still increasing, highly unusual. Look at 2019. Inventory levels in 2019 really peaked in June, but by the time we hit really October, inventory levels were decreasing. We also were seeing a decrease of inventory back in 2018 as well. So it's unusual to see here that inventory is still rising. In fact, when we actually just zoom out or zoom in over the last 12 months here, inventory levels is approaching levels compared to 1 year ago. So right now we're at 567,000 house for sale nationwide, according to altosresearch.com. 1 year ago, we're at 576,000. So getting very close to being in positive territory year over year. Now, when I actually zoom out here, inventory really spiked in the spring and early summer months last year, but after that, it more or less kind of plateaued here, slight increases. This year, we didn't see that run up in inventory levels during the spring months, but what we're seeing right now, which we did not see last year, is that inventory levels is sharply increasing still, whereas last year it was only increasing very, very slightly. I mentioned this because inventory levels is very much an early indication of our US housing market. When inventory levels is increasing, when it should be decreasing, that of course will put downward pressure on prices in the months ahead. And of course, I'll definitely keep you posted with the latest developments. Going back to Corelogic's report here, it says that we have a healthy US jobs market. I would kind of beg to differ because the most recent stats we have that was reported last Wednesday and last Friday kind of gave us a different depiction regarding our labor market here. So according to the ADP non-farm employment report, there was 113,000 job gains for the month of October, but the forecast was 150,000, so well below expectations. On top of that, also on Thursday, continuing jobless claims also came in higher than the forecast as well. Forecast of 1.8, it came in at 18,000 over that, and also above last week's or the previous week's numbers here as well. On top of that, initial jobless claims, these are people filing unemployment for the first time here, came in well below or well above expectations as well. 217 actual compared to 210,000 forecasted. Then on November 3rd, Friday, average hourly earnings on a month-to-month basis came in below the forecast as well. Non-farm payrolls also below the forecast and also well below the payroll gains we saw in September at nearly 300,000. Now it's only at 150,000. On top of that, the unemployment rate also increased more than was expected as well. 3.9% versus the forecast of 3.8%, and also September's unemployment at 3.8% as well. So to say our labor market is strong, I would beg to differ because last week kind of shared a different scenario. Of course, we'll have to see what happens in this week and of course in about a month when the new jobs report gets announced as well. But it appears we're starting to see some early cracks in our labor market. So I just kind of want to provide some context regarding their quotes right here. In any case, according to Someone Help, who's Corelogic's chief economist, she said the following: while annual home price growth continued its third month of upward momentum in September, this mostly reflects a comparison with last year's lows. I actually applaud her regarding this, because one of the reasons why home prices are up compared to 1 year ago is because home prices fell so much in the summer months and also the early fall months last year compared to this year, where we saw bigger declines last year compared to this year. That's one of the reasons why home prices are up year over year. Now, given the continued rise of borrowing costs in 2023, it is remarkable to see how resilient home price growth has been in recent months, with September's 0.3% month-over-month gain lining up with pre-pandemic trends. I will say though, when talking about home prices for the month of September, that's really what our market was like back in July and August. So in looking at rates in July and August, rates were much lower than they are today. Now, don't take my word for it. Here's actual data to support my claims here. In July, the average 30-year fixed rate, according to Freddie Mac on our good Uncle Fred's website here, was at 6.84%. Then in August, which is really when home buyers got their offer accepted in August, that affects closed home sales for September and also home prices as well, right? The vast majority of people getting their offers accepted in August are closed home sales in September. That was when rates were at 7.07%. Look what happened in September though, increasing to 7.20%. Then in October, surging to 7.62%. So we won't see these true effects regarding these high rates until we see home prices in November and December. Corelogic also looked at how each of the states fare, because there are some very big differences here. So for example, the states that posted a decline compared to September of 2022, compared to this September, was Idaho, Montana, Utah, Washington, D.C., and Wyoming. One thing I want to mention is this is actually an improvement, because in their previous forecasts from 1 month ago, this is prices from August last year through August this year, there was actually 8 states that posted a decrease. This month, 5 states are down year over year. One thing that I should mention here, this is mainly due to, again, prices falling much faster during the summer and fall months last year compared to this year. So here's a look at home price changes over the past 12 months by each of these states here. So if you've really kind of split the US in half here, much of the Western states are posting the smallest gains year over year, whereas the Eastern side of the US here are posting the biggest gains. Maine, for example, posted the biggest increase, a gain of 10.1%. After that was Connecticut, a gain of 9.5%. Then we had New Jersey increasing by 9.2%. But again, 5 states are down on a year-over-year basis. Now look at the map from 1 year ago. 1 year ago, there wasn't a single state that posted a decrease compared to the previous year. On top of that, the highest increases were Florida, a giant increase of 23%. Then we have South Carolina, a gain of 17.6%, and Tennessee increased by 17.4%. This is September 2021 through September of 2022. And in fact, here are the top 10 states that posted the biggest increases last year compared to September of 2021, all increasing by more than 13%. Now, when looking at the same chart this year, entirely different here. Only one state has posted a gain of over 10%. That was Maine. And again, all these other states here increasing by more than 6%, but much different compared to a year ago, where we saw a gain over 13%. What I also found to be very interesting as well is that these top 5 markets that increased the most last year were not even in the top 10 this year. So we have Florida, South Carolina, Tennessee, Georgia, and North Carolina not even making the top 10 states this September compared to last September. So last year, it appears the states that increased the most were in the South, whereas this year, we're seeing the biggest increases actually in the Northeast. Okay, that was the statewide level. Let's have a look how each of the metros fared. The top 10 biggest US cities here. So the biggest gain was actually in Miami, Florida, again, a gain of 8.5% this September compared to 12 months ago. After that, we had Chicago, a gain of 5.6, San Diego, a gain of 5.9, compared to a decrease in Las Vegas, down by 0.3%. Now, when looking at this chart here from 12 months ago, night and day difference, Miami, Florida, a giant increase of 25.6% compared to an 8.5% gain this year. Also last year, giant increases in Phoenix, Las Vegas, and Houston, Texas. Whereas this year, Vegas, for example, is down, and also Phoenix, only a small increase of 0.6%. Okay, changing gears slightly here, let's talk about the top 5 US markets in which Corelogic believes home prices will decrease the most over the next 12 months. So leading the nation is actually in Youngstown, Ohio. By the way, each of these markets here is a very high probability of price declines over the next 12 months. After that was Cape Coral, Fort Myers, Florida. Then we have Spokane, Washington, West Palm Beach, Florida. And then we have Delton, Daytona Beach, Florida, rounding out the top 5. So please leave me a comment below with your thoughts regarding this real estate market predictions from Corelogic, and also their forecast here for the top 5 markets in which they believe prices will decrease over the next 12 months. Please leave me a comment below. Also, check out that link below if you guys want a real estate agent referral. Hope you have an awesome day. Like and subscribe, and we'll see you on the next video.